okay in there?
Yes, you want to come take a look? So, looks like now finally we have some peace to continue our lesson. So, to excel in your financial decisions, you need to learn the language of finance. So now we will discuss the profit and loss statement and the terms used in it. But remember that these financial statements represent only the past performance of the company. However, we can use these to deduce the overall financial health of a company. But before we get into all this, it is important that we understand what sales, expenses and profits are. Hey, I don't think I'm going to move out from here for a while. It's a very important topic. Can you just stay outside? Wow. I bought this t-shirt for 700 rupees. I thought the fabric would be stronger. I'm sure barely 100 rupees is spent in manufacturing it. Now, what does this tell us? That the company has made a profit of 600 rupees. It is as simple as that. Now, before we move forward and discuss the key components of profit and loss statement, let me tell you a story of two of my friends, Mr. Lene and Mr. Dene. Now, Lene and Dene sound like brothers, but they are not. In fact, they strongly dislike each other. But they bear with each other for the sake of their business. Mr. Lene is the owner of a retail outlet where he sells t-shirts, and Mr. Dene has a manufacturing unit of the same. I will explain to you what a profit and loss statement comprises of with the help of their businesses. Now, Lene and Dene can follow either accrual or pure cash basis accounting. Let me tell you the difference between the two. In the cash accounting system, the sale is recorded only once the money comes in. Whereas in the accrual system of accounting, the sale is recorded as soon as the product is sold. Now, Dene and Lene follow an accrual system, like most listed companies. Dene sells to Lene on credit basis. That is, he sells him t-shirts without collecting cash or check upfront. Dene gives Lene a period of 90 days to pay, which is known as the credit period. And hence, our Lene follows the accrual system of accounting wherein sales are booked as and when the sale takes place. But the actual money is received at a later stage on a later date. When Mr. Dene sells his products to Lene, the total sales value is inclusive of the goods and services tax. This amount that is arrived at is known as gross sales. After deducting the GST from this amount, we get the net sales of the company. Mr. Lene once told me a very interesting thing, and I still remember it. He said, and I quote, "Sales is a function of two important parameters, price and volume. As a rule of thumb, the higher the price of the product, lesser will be the volume of sales and vice versa." Okay, it's getting really hot here. So let's move to another location.
Voy a cantar esta canción con mucho cariño de mi corazón.
What? What happened? I told you I'm going to take a while.
Why did you leave me out here? Huh? I don't even know what was going inside. I don't know how the camera was set. See, if you are going to do that, what am I going to do? You will take my job.
You are definitely going to take up mine soon.
What? No. I'm already regretting all the knowledge that you shared inside that dirty bathroom.
You didn't need to be there. You already know most of it.
Come on.
Yes, I know you have been secretly doing your own research. I saw you studying that morning till 4 a.m.
Mihir, I was watching a series.
Alright then. Answer this and don't pretend that you don't know. Okay?
Okay.
So, say one is looking at the financial statements of a company and realizes that the total operating revenue of that company in the current year has grown by 5 times the revenue of the previous year.
Okay.
However, the net sales of the company has not grown as substantially. Why did this happen?
No, so basically, what caused a sudden jump in the company's total operating revenue, right? See, a company's total operating revenue is not decided by the net sales. It could also have other operating income like royalty income, scrap sales, consulting fees, etc. So, if the other operating income is a much bigger figure, then an investor should always be careful while analyzing and understanding the final figure of total operating revenue, because a higher other operating income could inflate this figure sometimes and can be misleading, as the jump in this income may not be replicated in the following years.
Wow! I feel threatened. Good on you, Braj. Your parents should be proud of you, really. But now, where do we sit?
Yeah, we can sit over here. Yeah, you sit here.
This?
Yeah, and I'll put the camera here. That's perfect.
I hope we don't get caught here.
Like,
Okay. So, are you ready?
yes, ready and rolling.
So, as the years rolled by, George decided to expand his business to also manufacture pants apart from t-shirts to multiple countries. So, as an investor in his company, you would need to know how much revenue is generated by each product or each country. Basically, it's revenue breakup. You will find the revenue breakup in the notes to accounts in the annual report. This will tell you which segment of the business is generating more profits and revenues. It also helps the company to develop strategies to increase sales from products or geographies where the sales are lower. What the? Let's get out from here, yaar.
So let's move to some other place. No, not there, not there. Let's move.